Hey everyone, and welcome back to another earnings review. In this case, we are reviewing Alibaba. So Alibaba reported earnings before the market opens. At the time of making this video, the stock is down 4.5%. Why is that? Well, the quarter was actually a pretty good one, not gonna lie. Across the board, a good quarter. Yes, again, free cash flow, huge miss when it comes to free cash flow, but that's because of their continued investment in AI, in infrastructure, data center infrastructure, and all of that. And it shows. It shows in the cloud segment of the business. Good growth there across the board. So stock is down 4.5%. Now, Alibaba, market cap, $304 billion, closer to $300 billion now. And if you look at the last 5 years, they are still experiencing a close to 60% drawdown. Now, if you want to look at the exact performance of the last 5 years, it's down 37%. But the drawdown comes from, of course, the peak back here in, the end of 2020. But even the last 3 years, the stock is only now up 48%. Over the past 12 months, it's up closer to 60%. And year to date, it's up 50%. So definitely outperforming in the shorter term. In the shorter term, me personally, I am an investor in Alibaba. I bought at the end of 2024. It's in the public portfolio. So I'm pretty happy with the performance and especially, the timing of me buying the stock, because we've been talking about Alibaba for quite a while. It's been a good company for a long, long time. It's definitely been a cheap company for a long, long time, but that didn't really stop the stock from, underperforming for quite a long time. And so what exactly has happened this quarter? What's going on with the company? Am I still bullish on Alibaba? In short, yes, I am still bullish on Alibaba. It's a company with good margins, gross margins right now closer to 40%, EBITDA closer to 19.4%, net 12.3%. Free cash flow is one where I'm not really going to focus that much on right now because of the huge investments that they're making. Currently, looking at the last 4 quarters, it sits at 13%, but of course, it will come down a little bit lower. Trailing 12 months PE, 19.4 times. Forward one, 13.4 times. Looking at expected revenue growth 2 years out, 6.9%. EPS, 9.1%. And of course, these things will probably change. So let's go over the quarter, everything you need to know. If you enjoy this type of videos, hit all the buttons, especially the subscribe one. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, let's start off with a couple of comments here from management. Our results this quarter and for the full year demonstrate the ongoing effectiveness of our user-first AI-driven strategy, with our core business growth continuing to accelerate. Driven by strong demand for AI, Cloud Intelligence Group quarterly revenue growth accelerated to 18%, with AI-related product revenue achieving triple-digit growth for the 7th consecutive quarter. Customer management revenue at Taobao and Tmall Group grew 12% this quarter, reflecting the sustained impact of investments in user experience and effective monetization. Looking ahead, we will remain focused on our core businesses and continue to drive AI plus cloud as a new engine for our long-term growth. We delivered a strong quarter with revenue growth of 7% and EBITDA growth of 36%. We're confident in our business outlook and will continue to invest in our core business to strengthen our competitive advantages. We remain committed to enhancing shareholder returns. During fiscal year 2025, we repurchased $11.9 billion of shares, thereby achieving a 5.1% net reduction in outstanding shares. In addition, our board of directors approved the distribution of annual and special dividends totaling $4.6 billion. And so when we look at the repurchase amount, share repurchases, outstanding share, this is what we get over the last couple of quarters, actually over the last couple of years. So they're definitely trying to return as much value to shareholders. And of course, the longer the stock stayed undervalued and extremely cheap, the better it was for them. They also said the following with regards to dividends. Our board of directors has approved a 2-part dividend in the total amount of 25 cents per ordinary share or $2 per ADS, comprised of 1, an annual regular cash dividend for fiscal year 2025 in the amount of 13 cents per ordinary share or $1.05 per ADS, and 2, a one-time extraordinary cash dividend as distribution of proceeds from disposition of certain businesses and financial investments in the amount of 11 cents or so per ordinary share or 95 cents per ADS, in each case payable in US dollars to holders of ordinary shares and holders of ADS as of the close of business on June 12th, Hong Kong time and New York time respectively. The aggregate amount of the dividend will be approximately $4.6 billion. Quickly touching on the free cash flow issue. So net cash provided by operating activity did increase year over year, as you can see right here. But if you look at free cash flow, well, that did come down drastically. You can actually look in US dollar, that's only $516 million. Now, the big impact is this purchase of property and equipment, excluding land use rights and construction in progress relating to office campuses. You basically, well, get this big hit, which basically takes away almost all of the net cash provided by operating activity. They basically told us this, a decrease of 76% compared to the same quarter last year, which was mainly attributed to the increase in our cloud infrastructure expenditure, partially offset by year-on-year increase of adjusted EBITDA. And so, for the quarter, we basically get this. This is the main overview for revenue and adjusted EBITDA for each of the segments here. Taobao Tmall, Alibaba International Digital Commerce, which by the way, they put it as AIDC, so that's not Artificial Intelligence Data Center. No, it's Alibaba International Digital Commerce. We got Cloud Intelligence Group, China, which is the logistics side of things, local services, digital media, and entertainment. And as you can see, adjusted EBITDA growth here across the board. Yes, internationally, they're still losing money there, still losing money on logistics and local services, but Taobao and Tmall Group is doing fine. Cloud Intelligence Group is doing fine as well. So year-over-year growth rates are as follows. Taobao and Tmall Group up 3% year-over-year for the last 12 months. For the quarter, we're up 9%. China Commerce Group is up 8%, Customer Management up 12%, Direct Sales and Others down 1%, and China Commerce Wholesale is up 17%. As for the international segment, that's up 22%. International Commerce Retail up 24%, International Commerce Wholesale up 16%, Cloud Intelligence Group up 18%, China Logistics down 12%, I'll explain in a second why, Local Services Group up 10%, Digital Media up 12%, and so overall revenue did increase 7% year over year. Income from operations is up 93% year over year, net income is up 1,203%, diluted earnings per share or ADS is up 296%, and adjusted EBITDA is up 36% year over year. So definitely doing very well at the bottom line. Now, as for the specific segments here, Taobao and Tmall Group, they said the following. The number of 88 VIP members, our highest spending consumer group, continue to increase by double digits year over year, surpassing 50 million. We will continue to focus on improving retention rate of 88 VIP members. We've seen the same thing happen with Prime memberships or even Coupons. I believe it's called the Rocket one. So always good to focus on your highest spending consumer group. And then, yeah, this is always good to see. Customer management revenue did increase 12% year over year, primarily driven by improvements of take rate year over year. Moving on to the Cloud Intelligence Group. During the quarter, the year-over-year growth of overall revenue, excluding Alibaba consolidated subsidiary, accelerated to 17%. This momentum was primarily driven by an even faster public cloud revenue growth, including the increasing adoption of AI-related products. Notably, AI-related product revenue maintained triple-digit year-over-year growth for the 7th consecutive quarter. Our AI products are seeing broader adoption across a wide range of industry verticals, including internet, retail, manufacturing, and media, with a growing focus on value-added applications. In 2025, Gartner Innovation Guide for Generative AI Technologies, which assessed vendors across 4 defined submarkets, Alibaba Cloud was the only Chinese provider named an emerging leader in all 4 areas: Gen AI model providers, Gen AI engineering, Gen AI specialized cloud infrastructure, and AI knowledge management apps, general productivity. The revenue growth acceleration was primarily driven by an even faster public cloud revenue growth, including the increasing adoption of AI-related products. Now, as for the logistics side of things, why is that down? Well, they said here, this is the result of the increasing integration of logistics offerings into our e-commerce business. They saw a decrease of 12%, primarily due to a decrease in revenue from domestic logistics services as a result of our e-commerce business taking on certain logistics platforms' role. So, all in all, to me, this was a good quarter by the company. Things are moving definitely in the right direction, especially when it comes to Cloud Intelligence Group, but even the core business, Taobao and Tmall Group, right? Previously, this was something that was barely growing. That was also due because of the lockdowns and then the Chinese economy. But clearly now, of course, we're also lapping, I would say, easier quarters. So the comps are quite easy. Well, easier. But it is good to see that the core business, Taobao and Tmall Group, doing very well. Internationally, they're doing very well as well. And then you've got the third one, which is the Cloud Intelligence Group, accelerating. So good across the board. Yes, free cash flow. We would like to see free cash flow reaccelerate. But then again, I mean, they're investing quite a lot in the business and the results speak for themselves, right? If we didn't see Cloud Intelligence Group pick up, then I would say, okay, then we're decreasing free cash flow drastically without really seeing any positive impact, especially not when it comes to cloud and AI. But we are. So short term, yes, we're taking a free cash flow hit. Long term, I think this is going to be a very, very good move. And so, yeah, while right now the stock might be down 4.2% before the market opens, I still think this was a very good quarter. This is a good company trading at a good price. I like the position I have in Alibaba. No intentions of selling any shares anytime soon. That's about it. Do share your thoughts and opinions down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye-bye.